Ajay Srivastava, CEO at Dimensions Corporate Finance, as well as Saurabh Mukherjea, founder, Marcellus Investment Managers, both joining this evening. Gentlemen, evening to you guys. Saurabh, let me kickstart the discussion with you because you'd called the economic slowdown much ahead of time. How is it that you see the economic reality right now? Do you think that we're at the tip of the iceberg, or would you say much of the pain is already in the price?
I think we've got a critical 6 months ahead of us, and I would say even more importantly, we've got a critical 90 days ahead of us, wherein through a combination of the budget pronouncements from the central government, the new government in Delhi, and with help from the RBI, we'll have to figure out some way of dealing with this triangle of problems around real estate developers, around debt mutual funds, and around NBFCs. I think these problems are fairly deep. They've been around for a while. It's basically started roughly last summer, and the ILFS debacle has exacerbated the problem. But I think these three issues, these three interlinked issues of real estate, NBFCs, and debt mutual funds will have to be resolved in the next 90 to 180 days if the economy is not going to slow down further. If we can't resolve these issues, I think the economic slowdown will linger for far longer than any of us will want to see it linger.
Sure. Ajay, let me bring you in on that. How severe do you feel is the liquidity issue currently on the back of what we are seeing with regards to the whole NBFC crisis, as well as the other macro factors at play, and now we're tracking global cues as well and easing monetary policy there. Do you feel that this is a concern that could get deeper? How are you looking at it right now?
See, I think liquidity has been an issue for a while. It has becoming more and more acute by the day. But having said that, when you convert that to the impact on the stock market, you find an amazing thing. And the amazing thing is, the worse the slowdown becomes, the worse the liquidity crisis is, the better it becomes for some of the stocks in the economy, in the stock market, and the worse it becomes for mid-cap and small-cap. So a slowdown, liquidity trap, which is all we are seeing that is going around, and it's not going to ease up. I think Saurabh was, highly optimistic, perhaps we all should be, that's going to ease out very soon. It's not going to ease out very soon. It's going to take its own while to ease out because there's nothing happening, so you can't just ease out on own. But the fact is, as investors in the market, it is doing a different kind of impact on different kind of companies. So if you look at the A-rated banks, it's giving a great positive impact because the competition is going out, and therefore you're left with no choice but to go to the banks. If you want to go to the C category NBFC, they are dead and buried in the market. So, so the same slowdown is having a very different impact given the size of the company and the nature of the industry. We have seen wherever in an industry there are big and small players, i.e. retail, you'll find that this slowdown is giving a major benefit to the bigger players as smallers move out. However, in industries like two-wheelers, where there are only 4 or 5 large players, then of course the competition is getting them and all 4 are getting hit. So there is no universal way to examine the impact, but the slowdown is very clear. It is going to worsen because as now we are seeing the monsoon, the drought situation, and the budget, we don't know what the budget looks like. Will it put a cap on the non-revenue expenditure? And the issue is, very simple issues are not handled. One is, the biggest litigant in this country is the government of India, whether you look at NHAI, whether you look at the contract with the government, whether you look at income tax. If they start releasing the money in terms of the settlements, arbitration, awards which are given and do not contest it, or at least give the money in the interim, you'll find lots of things easing up. So there are very simple steps which could have been done or can be done. Let's hope they get done. Otherwise, we are looking at literally a washout of this year.
And Ajay, we'll come to the resolution of these problems and the cures in just a bit. But you highlighted what's going on with the domestic context. But if I were to look at the global context, yes, the S&P may be sitting at an all-time high. But the fact of the matter is the yields seem to be indicating something else. They're hinting towards a recession. Add to that, while there is an easier global monetary policy, and that's what the Fed dot plot seems to be indicating, but you still don't know what's really going to come about out of the G20 meet between Xi Jinping as well as Donald Trump, and whether or not they will finally put to rest this entire fear of a trade war. In this global context, do you think that if the worst of the fears were to play down, this is just the tip of the iceberg when it comes to the consumption slowdown back home that we're staring at, and the problem could be much more deeper and way more elongated than what we can comprehend right now?
See, first of all, let me put it this way. Yes, there is a political issue in the US to get the interest rates down. But by no stretch of imagination, we can call it a slowdown. I'm just coming there, I travel there. There is no case of slowdown at all by any standard. You talk to any company, even talk to Indian companies for that matter. Let's look at Indian companies' contracts in the US. Talk to the IT companies, they've got more contracts than they can deliver. I've just come from a meeting with the CRO today morning. They have a backlog of customers they can't accommodate into India, the contracts in terms of backlog. So I think one of the biggest misnomers we are looking at is that there is some kind of a huge slowdown in the biggest market, the US. Sure, Europe has slowed down, by all means it has slowed down, but definitely not US. US is seeing huge traction, and for the Indian companies, which are CRO companies, which are IT companies, I don't think anybody is talking about a recession. They have got orders, the pipeline is full, there is enough robustness in that, and best part, pricing is also pretty good. So I think we should, as a country, given our, our trade is very small in the global context, but relevant to us are our exporters. I think exporters are in a fantastic position. Thanks to the Trump issue with the China, they are getting orders from China, whether it's IT, whether it is CRO, whether it is pharma. And number two, more importantly, it is giving a huge capital to us. Look at the private equity space, which is abundant capital available from the US today for all the startups, the IT companies, etc. So, I would put it this way. That is the great silver lining for India, is that the huge China problem is throwing back to us a strong business momentum. Now, how much we capitalize, up to us. But I can tell you for sure that all the services companies are having the greatest time they ever had in America, notwithstanding the frontline issues on visa, etc.
Okay. I'm going to come back to you, Ajay, on that. But Saurabh, let me just also get a perspective on how this has impacted markets and whether or not you feel that the slowdown has fully been priced in yet or not.
I think for the last couple of years, I've been saying on your channel that the market's around 15% or so overvalued. I think that still holds true. I think a combination of global liquidity plus local factors such as a great deal of faith in the market, in the political dispensation in Delhi. So a combination of global liquidity and local factors has meant that we've had a consistently overvalued market over the last couple of years. At one level, that's no bad thing. I mean, for stocks to be 15-20% overvalued is no bad thing. Where the challenge arises for your viewers is if they end up, say, if they ended up buying a couple of years ago NBFCs and banks in great quantities, obviously their portfolios would be the worse for it. And similarly today, if people out there are buying low quality companies in the Nifty with poor balance sheets, poor accounting, weak governance, that obviously drags down their portfolio returns. So there are opportunities to make money in the Indian market. There are consistent opportunities to make money in the Indian market, but one has to be a little careful about valuations at the market level as a whole, and one has to be very careful about quality of companies, the quality of governance and accounts of the companies that you're investing in.
Okay, we've discussed how grave the problem is and the reasons why we are facing the slowdown blues. Saurabh, if I could, or actually Ajay, because you were making the point as to there is a solution to the problem, but that's going to take some time. What is the solution really for the investors, which are seeing those blue chip stocks of 2017, 2018 bleed, most of them thrashed out at 52-week lows, and it was the consumption juggernaut which India could never go wrong with. We were always looked upon as a consumption story. Now what do you do with FMCG, autos, what have you?
See, it's very elementary, and I think history has shown us this economic lesson. The more any country moves towards socialism and gets away from capitalism, you will find a general depletion in the wealth of the nation and the wealth of the citizens of the nation. It's a given, it's experimented. We've seen Russia, we've seen Iran, we've seen Venezuela, we've seen parts of Europe. Everywhere in the world, this is a common feature. What have we done in the last couple of years? I'm not saying this government or the previous government is more and more doles. I think they have to put a stop to any more doles, because that is what is costing us severely. Today, thanks to our pension schemes, our employment schemes, our health insurance schemes, put it all together, we are almost sounding like a socialist nation. Now, a socialist nation needs money to pay for its schemes, and that money is coming from productive resources. Therefore, what did you see in the last few years, or at least last 8 to 10 years? You see more and more dividends from PSU going to pay revenue expenditure. You saw OROP being muscled, the government being muscled into giving OROP. So we have antiquated planes flying into mountains today and losing precious lives today. We have no money for capital expenditure in the union budget, as you can see it. Look at the PSUs. All the money used for buyback and dividend, no money for the capex. So when you want to move to a socialism at such a large degree, you will lead to this kind of a platform, what has happened today. So first is, we need to stop the bleeding. The bleeding is more and more schemes need to stop. The second, as I said, is that government cannot become the largest litigant in this country. If you look at the story of road projects, it's a story of all under arbitration awards, NHAI versus fighting versus the contractors and the companies owe money to the banks. They can't pay money to the bank because the amount is held up in NHAI, and therefore everything has come to a standstill. The whole concept of private partnership in the road project is at standstill because NHAI is the biggest litigant in the field. And the money is not released because under arbitration award, they go for appeal, and it takes 8 years to get your money out. Same is true of income tax, same is true of GST, same is true of VAT, everything. So we need to get in a situation where lots of money which the government is holding gets back to the people, they pay their loan, the economic cycle starts. These two cycles are more important. The third one, the most critical one, is the PSUs need to start spending money on capex. They need to set up new projects. We haven't had a new power plant, we haven't had a new refinery, we haven't had anything new for the last few years. We need to go that path on the capital expenditure side. And the last but not the least, please welcome real estate. Real estate is the driver for every economy. You see Hong Kong, you see Singapore, you see US, you see everywhere. Real estate is the backbone on which we have to work. We need to start loving the real estate.
Okay.
We need to start loving the MSMEs. We need to give them credit.
Sure,
I think
Ajay.
this is where we should start, and I think we will find a way to get back to an order.
Great points, Ajay. We're going to just wrap up now. So let me get a final view from Saurabh as well. Saurabh, your solution, as in what you perceive as the best solution that the government, policymakers can perhaps put in place in order to arrest this slowdown.
I think the first area which needs urgent remediation is the whole issue around NBFCs. There is a lack of funding for these vehicles. The NBFCs in turn are no longer in a position to fund either vehicle purchases or home purchases or real estate developers. So I think a solution has to be found here, and I think we need all parts of our regulatory ecosystem, NHB, RBI, SEBI, Finance Ministry, to come together, put heads in one room, and look for a way of figuring out how to get liquidity back into the NBFCs. If that means new equity infusion in the NBFCs by promoters, I think so be it. But we cannot carry on in this current shape and form, where the bond market has lost faith in the lenders. The lenders in turn can't finance economic growth, and we are sort of spiraling down every month. So we need a sort of all hands on the deck effort on the part of the authorities and on the part of the banking and financial services sector to see how we can prevent this erosion of confidence in NBFCs from exacerbating further.
Saurabh, Ajay, both of you, thank you so much for taking time out. Actually, this problem is so big, we could have a 2-hour show on this, but unfortunately completely run out of time. Thank you so much, both of you, for taking the time out and speaking with us.